Okay, so we're back. It's Thursday. GDP just happened. And unemployment rates, right? So we had those two economic reports and some other ones. So all the news were mixed. Okay, everything was mixed. Yet GDP, was strong numbers. So that's why you see the big push down to the left side, the big red candle. So now we're waiting for confirmations. This is the third time we're going to hit 23.72. So I'm looking to get into a trade. There you go. Trade was placed. As you can see, this is the third time we tap into it, right? So the next stop for gold is going to be around 23.74. So it's like about 20 pips above this entry, and that's where I have my stop loss. My stop loss, my take profit, and we'll take it from there, right? So we're looking to grab 10-15 pips, and then we call it a day. That's what we're looking for. This week has been very interesting because conditions have changed in the market, right? And what do I mean by that? This is why it's very important to trade every day, so that you can, see, you can catch changes in the market, and you adapt and you continue. You get back on track, right? So this week, it was my first time closing a day with a loss. It was like about 30 pips that we closed the day, right, with negative 30 pips. And the reason why is because in the last few weeks we be getting our pullbacks have been 20-30 pips max, 10 pips, and then we continue, right, with trend. But this week it's been interesting because the pullbacks have been 40, 50, even 60 pips, right? So we learned that on Tuesday. Okay, we learned that on Tuesday, and then we took note. We started seeing the pattern of big pullbacks, so we adapted, right? So again, we just made some changes. Now we wait for longer for confirmations, and then we just patience pay, right? So now we take a little longer to take the trades because we are aware that pullbacks are being 40, 50, 60 pips. So now we're back on track. We already, the week is already in profits again, like it should be. And that's why I talk about a lot about trading every day, because the conditions change, right? The idea is always the same, right? We have a support resistance. We draw our no trade zone, and once we leave the zone and we break a key level, boom, we take a trade. But this time the pullbacks are 40, 50 pips, even 60 pips. So we had to be careful to enter, because we don't want to get caught in a pullback of 40, 50 pips, 60 pips like it happened to me on Tuesday, right? So again, we managed to learn that, and now we take more precaution, and then we know it's doing great, right? So we're still in the trade right now. We're waiting for a little bit more volume to kick in, to go to 74, possibly 75, even 76, and then gold is going to decide what to do, because we're still in a very choppy zone, right? So we're waiting for that. Other than that, again, one thing that I was talking to a trader yesterday is that we tend to go for a lot of pips, right? Like 40, 50 pips at once. And if you really pay attention to gold, if you really look at gold, unless you're willing to wait and like really, really, really wait and gamble it, gold move into ranges. Usually moves, 10 between 10 to 20 pips, and then it does a pullback. 10 to 20, and then continuation. 10 to 20 pips, pullback, continuation. So sometimes you get your 10-20 pips, and then the pullback is bigger than the 10-20 pips. So now your stop loss get hit, right? So, and you never grab anything. So the way I was teaching is that we have to adapt and we have to start grabbing, those ranges rather than waiting for a lot of pips, right? So master your pair first, and then master profits later, right? So as you can see, TP got hit. You're gonna see two trades, one from Asian session, we took 10 pips, and then right now on New York, we took another 15 pips, right? So see you tomorrow.